Have you ever swiped right or left on a dating app? Well, investors did swipe right on Bumble, but they are regretting it now. Here's why. Now, a lot of you may not know, but Bumble is actually listed on the NASDAQ, and the stock was up 26% in trade in this particular week. But those were not for the right reasons. So specifically, Bumble announced that the company is firing 30% of its workforce. While that did drive the stock upwards, let's take a little bit of a look at what's happened in the past. The key aspect is because of this workforce reduction, the company will save $40 million annually going forward. Bumble listed in the booming equity market back in 2021, but the stock is now down 91% from its high of about $75 per share to just $6 per share now. But what led to this particular fall? Let's look at that aspect. Well, post the sharp fall in the equity markets back in 2020, not only public but even the private health companies or startups also felt the funding crunch. Post a sharp recovery in 2021, not only did the stocks make a comeback, we also saw a lot of startups such as Bumble actually list their businesses on the equity market. While the bull market did get a positive response for stocks like Bumble, that led to a creation of a froth essentially and very high valuations in the market, and Bumble was one such case. So Bumble's revenue has fallen from almost 900 million in FY22 to just about $250 million in FY25, reading out the euphoria. Key aspect is that people who invested in Bumble in 2021 during the IPO at a market valuation of $7.7 billion, the valuation has now corrected to less than $1 billion at just $683 million. The key aspect is this is a 91% fall for all investors who've held since listing at the IPO time and getting allotment as well. One key lesson, of course, has been that IPOs at the bull market peak range is always with froth, and this has been advocated by many investors such as Warren Buffett himself. The key aspect is also that we've seen such stories here in India as well, with stocks like Paytm, which listed around a similar time for 2,150 rupees per share, but the stock corrected to almost 400 rupees per share as well post that.